Imagine a country sitting on some of the largest oil reserves on Earth, and yet producing less than 1% of global supply. Now imagine the President of the United States standing in the White House and saying, "We want $100 billion invested there." That is not a typo. 100 billion. I'm Fareed Zakaria, and this moment tells us far more than a story about oil. It reveals the collision between political power and economic reality. Donald Trump believes Venezuela's oil can be unleashed. Lower prices, strategic leverage, American control. But across the table, oil executives hesitate. One word hangs in the air. Uninvestable. Not because the oil isn't there, but because trust is not. If you care about energy prices, global power, or how markets actually work, stay with me. Because what's happening in Venezuela is not just about barrels of oil. It's about whether force can replace institutions. And that question takes us deeper into how Venezuela reached this breaking point in the first place. To understand this moment, we have to strip away the spectacle. This is not simply a negotiation over oil contracts. It is a test of how power works in the modern world. The United States is signaling something unprecedented, that access to Venezuela's oil will be mediated not by Caracas, but by Washington. Companies are told, plainly, you deal with us. Revenue flows into US-controlled accounts. Sanctions are lifted selectively, not universally. On paper, this looks like control. Leverage, order. But markets do not respond to declarations. They respond to rules. Oil companies do not ask first how big the reserves are. They ask who owns the assets. Can contracts survive politics? Will today's deal exist tomorrow? This is the tension at the heart of the story. Political authority can open doors, but it cannot, by itself, create confidence. And that forces a deeper question, one rooted in history, because Venezuela has been here before. Venezuela's oil story did not begin with crisis. It began with promise. More than a century ago, oil transformed this country into one of Latin America's richest nations. Foreign companies arrived, capital flowed in, institutions followed, but over time, something changed. Oil became not just an industry, but a political weapon. Successive governments treated it less as an economic system and more as a source of control. Assets were nationalized, contracts rewritten, companies pushed out. Twice, Exxon had its assets seized. Once might be misfortune. Twice is a pattern. Then came deeper mismanagement, underinvestment, sanctions, a steady erosion of capacity. Production collapsed to roughly 1 million barrels a day, a fraction of its potential, a fraction of its past. This is the cycle of resource-rich states that fail to build durable institutions. Oil masks weakness until it exposes it. And when politics replaces predictability, capital retreats, which brings us to the first rupture, the moment when theory met reality and everything began to crack. The rupture came quietly, but its meaning was explosive. In early January, US forces seized Venezuela's leader in a dramatic operation. Overnight, power shifted. Not gradually, not through institutions, but through force. The message from Washington was clear. The old order is gone, and a new one will be managed from the outside. At the White House, the tone was confident. Venezuela was declared open for business. Sanctions would be rolled back selectively. Oil would flow. Prices would fall. But across the table, the response was restrained. Executives nodded. They listened. They did not write checks. Exxon's chief executive said what others would not. After having assets seized twice, returning would require significant changes. Today, he said, Venezuela is uninvestable. That word matters because it exposes the gap between political victory and economic viability. You can remove a leader in a day. You cannot rebuild trust that quickly. And that tension leads us to the deeper machinery underneath this crisis. The system few see, but everyone feels what sits beneath all of this is not ideology, it is architecture. Oil investment is not driven by optimism. It is driven by systems. Companies commit billions only when three conditions exist at the same time: physical security, legal certainty, and a competitive fiscal framework. Venezuela has none of them yet. The United States may control access. It may control revenues. It may even control timing, but it does not yet control the one thing markets demand above all else: durability. Who guarantees contracts 5 years from now? Who protects assets if politics shifts again? Who arbitrates disputes when sovereignty itself is blurred? This is why even friendly executives speak carefully. Why support is verbal, not financial. Why promises stop short of dollars. Smaller firms may move first, tens of millions. Calculated risk, but large firms wait because an energy scale magnifies mistakes. This is the invisible mechanism at work. Power can compel compliance. Only institutions can compel confidence. And when that confidence is missing, pressure builds until the system faces its second shock. Pressure eventually creates exposure. And that exposure is now visible in the numbers. Venezuela produces roughly 1 million barrels a day. Less than 1% of global supply. Even if production rose tomorrow, prices would barely move. This is the second crisis: expectation versus physics. Trump's promise is political speed. Oil moves at industrial speed. Fields are degraded. Infrastructure is aging. Human capital has fled. Analysts are blunt. To triple production by 2040 would require $8 to $9 billion every year. For decades, not headlines, not speeches, steel, engineers, time. This is why the $100 billion figure sounds fantastical, not impossible. But detached from the conditions on the ground, investors know this. They hear encouragement, but they see uncertainty. So momentum stalls, not in public, but quietly. And while governments argue over leverage and control, another reality sets in, one that does not wait for policy clarity. Because the true cost of this limbo is not paid by states or corporations. It is paid by people. And this is where the story stops being abstract. Because while executives calculate risk, you live with the consequences. When oil production collapses, it is not balance sheets that break first. It is daily life. Energy shortages ripple outward. Jobs disappear. Public services weaken. For years, Venezuelans have watched opportunity drain away, not because resources were scarce, but because stability was. Now, even in this moment of supposed reopening, uncertainty remains. Who is really in charge? Where does the money go? Who decides the future? If you are a worker, you wait. If you are an entrepreneur, you hesitate. If you are a family, you endure. And here is the hardest truth. Foreign investment cannot substitute for trust inside a society. That trust takes time, transparency, rules that apply to everyone. If this analysis resonates with you, if you want more clear-eyed explanations of how power and economics collide, share this video. These are not distant issues. They shape lives. Because what happens next in Venezuela will not stay in Venezuela. It will move outward. What unfolds in Venezuela is being watched far beyond its borders. Because oil is never just oil. It is leverage. If Venezuela were to stabilize, even modestly, it would reshape regional dynamics. Latin American energy flows would shift. US influence would deepen. Rivals would adjust. But instability also travels. Uncertain supply keeps markets cautious. Prices remain vulnerable to shocks elsewhere, conflict, weather, politics. And the promise of Venezuelan oil, endlessly delayed, becomes a variable that traders discount. There is also a geopolitical signal here. When the United States controls access, revenues, and timing, It sends a message not only to investors, but to other states. Power can intervene, but rebuilding legitimacy is harder. Allies watch carefully. So do competitors. Because if Venezuela becomes a model where political change precedes institutional repair, others will ask whether this path is sustainable. And that brings us to the most important question of all. Not what happens next week, but what happens next decade. The future branches here. The future now divides into three paths. The first is optimistic. Institutions begin to form, rules stabilize, contracts endure beyond personalities. Investment grows steadily, not explosively, but credibly. Oil production rises over years, not months. Venezuela regains relevance, not dominance. Trust returns slowly, because it is earned. The second path is muddled. Political control persists without deep reform. Selective investment trickles in. Production inches upward. Enough to survive. Not enough to transform. Venezuela remains a question mark present in forecasts, absent in reality. The third path is darker. Power shifts again. Rules are rewritten. Assets become bargaining chips. Capital withdraws. The promise of oil hardens into a curse once more. Which path prevails depends on something deeper than oil prices or foreign policy. It depends on whether institutions outlive interventions. Because markets forgive instability. They do not forgive unpredictability. And that is the final tension. Venezuela's future will not be decided by how much oil it has, but by whether it can convince the world that this time is different. And that brings us to the end of this story. This moment in Venezuela feels dramatic. A leader removed, oil declared free, money promised, but history teaches us something sobering. Power can open a door. Only institutions can keep it open. $100 billion cannot be commanded into existence. It must be invited by law, by stability, by trust that survives politics. Today, Venezuela is not poor in resources. It is poor in certainty. And until that changes, oil will remain underground, not by geology, but by design. If you take one insight from this story, let it be this. Markets are not moral, but they are consistent. They reward predictability. They punish volatility. If you found this analysis useful, share it. These stories matter because they show how power actually works beyond slogans. And if you want to understand what comes next, how energy, geopolitics, and institutions will shape the decade ahead, stay with me, because Venezuela is not an exception, it is a warning.